Microsoft just reported fiscal year-end results, and the stock is actually down almost 4% after market hours. And I believe that that's because they showed weaker than market expected cloud growth results, which is kind of weird the way that I think about it. And I will explain that in this video. And so let's get into it. All right, guys, let's jump right into this. So there's a lot to cover, but you can see right off the bat that the market was not as happy with the results as at least I was. I thought these results were fine, but yeah, overall the market is down 3.7%, but ultimately that's really nothing. The shares are still trading at a pretty high level. They've done very well year to date. And if I just look it up quickly, year to date, Microsoft is actually up 47% or 46.5%. So, I mean, being down 3.7% on the earnings, it's not the end of the world. Now, let's quickly take a look at what's going on. So you can see productivity and business processes are up 10% year over year. Intelligent cloud is up 15%. And I think this is what the market is upset about. And, you know, there is continued weakness in the personal computing business. And we're not just seeing this with Microsoft. We are seeing this with other companies, especially, you know, the computer makers. But, you know, one of the big bets that I made this year was I did a sort of like a cash secured put bet, but I made a bet on some of these computer makers like HPQ, and it actually ended up working out very well. I've kind of earned, or I think the premium on the cash secured put has sort of dwindled to less than a third of what I generated for that same option. And so, you know, overall, it's really reflecting the fact that the risk that people saw at the end of last year or the beginning of this year is subsiding as people are getting more confident with the economy. And I think, you know, as time goes on, I think that more personal computing segment will reverse as, you know, the economy sort of picks up a little bit. So I'm not overly worried about that segment. Neither am I worried about the cloud computing segment. Recall, guys, that Microsoft is huge. And so for them to grow at, you know, 30% that segment, it would really require a lot of confidence in the overall economy for companies to start thinking about investing into cloudification. And so the fact that Microsoft is even growing at 15% year over year is absolutely fantastic. At least that's kind of the way that I'm thinking about it. And so just going into the business highlights, so you can see that their commercial products for Office and cloud services were up 12%. This is in the productivity. They also have cloud, and of course, in this segment. And then, of course, Dynamics. You know, this is something that I really love about the company. And I think more and more companies are taking them up on their dynamic products. I think it's just becoming a more normal process or a business process. And so, yeah, up 19% makes a lot of sense. In fact, I think that's a little bit high. I actually didn't expect it to be that high, but you know, it is a emerging product and or emerging suite of products. And so, you know, the other thing is that, you know, when we start thinking about their cloud business overall, I'm not sure why the business media is saying that this is slow growth. I think 17% or 18% on a constant currency basis for their server products and cloud services revenue is fantastic in this economy. I just don't see why you would expect more. And I think here's one of those situations where you have to pare back your growth expectations in order for your models to make sense. And I think the market might have gotten carried away with this. And I'll show you why in a second. But of course, you know, their personal computing segment, Windows OEM revenue declined to 12% and their devices revenue decreased 20%. But once again, with respect to just this segment going back to 0%, I think that happens when, you know, the sales of PCs goes back to a normal rate. I think they're really high just slightly post-pandemic. And then, of course, they pulled back significantly in 2022. And so I think you'll rebound just to sort of like the middle level. And so you'll see this sort of like middle or level out, I would say. And just diving a little bit deeper into cloud, you can see why the market was so optimistic. You know, when you're seeing, you know, 20% growth levels, and then you come down a little bit, and then, you know, even on a constant currency basis, you're much higher. You're 25% or higher. And now on a constant currency basis, you're 21, but, you know, you're in the high, like the 17 area. I could see why the market would have been like, you know, we were hoping for you guys to go back to around 20, 21, 22%. So the fact that you're at 17, we have to bring down some of our expectations. I get it. But at the same time, you know, when you're seeing 22%, et cetera, I would always be pessimistic in my revenue growth forecast. And so I would have forecasted something lower. I'm going to go back and take a look at my model just to see exactly what I was forecasting. But this is tough. It really is to forecast it out. And one of the things that I've done over the last, I would say, couple of years, or last year especially, is just become very, very conservative in the way that I've been modeling things. I'm not always right, and I'm not always a bang on, and sometimes I do change my mind. But when I see something like this, I would probably taper my expectations. I think 15% is a good number, and some quarters are going to be above it, some quarters are going to be below it, and that's just fine, especially in this current economic environment where there's a lot of uncertainty. So the fact that they're growing 17% year over year in an environment where companies are being a little bit tighter on their capital deployment shows how strong this business offering is for Microsoft. So this is actually a bullish number, and I'm more impressed with the 17% number in Q4 of their fiscal 2023 than I was of their 22% in Q4 of fiscal 2022. Now we have to talk about the company's foray into AI. We've talked about this on this channel before. Companies' OpenAI relationship has helped to drive its generative AI business. I would say, however, that a lot of this stuff is new, so you're not really going to be seeing it in their results just yet. So, as you read about this stuff in the business media and from other commentators, just keep in mind that not a lot of this is reflected in their results as of yet. And it's a little bit hard for me to see this and forecast this out. And so I haven't been. And so there might be some optimism in their results as a result of just the AI train in general. I'm not forecasting anything additional for them with respect to AI. So that might be an area where my valuation comes up short. And so, you guys let me know how you guys think about valuing that out. But, they remain focused on AI growth. And I think that's one of the reasons why they're just getting a higher multiple. And, last week, Microsoft did announce plans to charge businesses $30 a month per person for access to an AI-powered assistant for Microsoft 365. I don't see how an AI-powered assistant would help me with Word and Excel. Actually, I could see how they would help me in Excel if it would just build out exactly what I'm looking for. So if I just put out a data set and I just typed in exactly what I wanted it to do with the data set and it did it, and it really sped up what I was looking for, I think that would really help. Let's see how this plays out. In fact, what I'll do is I'll YouTube what that AI Power Assistant actually does and see if it's even worth it for $30 a month for me, because I use Microsoft pretty much. I use Excel all day, every day. And so that might be something that might be worth it for me. So I'll take a look at it and see if it's worth even talking about. And then, does it make sense for that $30 a month per person for, the larger business community? I guess I can assess that better. Also, the point that I made is that the company recently launched many of the AI products, so investors won't really see much of an impact on sales, but early customer interest is strong. But just because there's a lot of customer interest doesn't necessarily translate that to sales. For example, I'm interested in the AI Power Assistant. Let's see if that actually translates into sales, and I'll have to do my homework on that before I can figure that out. And they are saying, or there are analysts that are saying that demand signals and customer conversions are very real. Okay, well, we'll see it in the results. And as you guys are already aware, there's something that I talked about a lot last year, which was the FTC. I think they overstepped when they tried to block the Activision deal. The Activision deal has gone through. Anybody who has speculated on this deal has made a little bit of change. And so, congratulations to everyone who did make some money as a result of this transaction. It didn't look like it was going to go through at certain points. And so it's interesting that it has done so, or I guess it will now. Now there are very limited roadblocks in the horizon. And once again, just a reminder, Microsoft is up almost 50% year to date. So congratulations to anyone that bought this company earlier on when it was a little bit on the cheaper side. And so, I never did. It was always a little bit too much for me. But, once again, there's a lot of smart investors that did buy into it. And so congratulations to you guys. Now, if you haven't seen the Alphabet review that I put out on this channel, you can get access to that video right here.